So is there a housing bubble forming in the U.S. real estate market? That is the question being asked by everyone out there. Ever since last Thursday, March 31st, the Dallas Fed came out and said they see signs of exuberance and signs that the market is becoming unhinged from its fundamentals, and that a housing bubble may be starting to form here in our country. So I went and looked at, their story. I read their story. They have formed, quote, 3 new models of how they're measuring the housing market. One of them is coming up with some type of model to measure exuberance. How the hell you do that? I have no idea. The second method is doing the price to rent ratio, where they're saying rents are, prices are becoming so much higher than the rent is, that is unhinged. The third one is the housing price to income ratio, that home prices have risen too fast above income levels. And so it was interesting as I look at those. Like I said, the first one, I hate to get on my soapbox, but how the heck do you measure price exuberance? The second one, the next two, honestly, how, measuring income and price, or income and rent, is really a stupid decision, because there's so many other factors that go into play of where they totally throw out when you do that. What are mortgage rates? What is the size of the down payment, and other factors? So they're really red herrings in my opinion. So I don't trust what the Dallas Fed is saying here. And I know probably every one of these economists that helped write this report have PhDs in economics. But let me tell you, I think they have stinking forgot Economics 101. They either forgotten it or they failed it. They've forgotten economics. Everything comes down to, initially, for prices of any asset, supply, demand. And that's the economic fundamentals of any asset, whether it be a stock, bonds, real estate. It comes down to supply and demand. And when you look at the demand side of things here in our country, please know that we have approximately 4 million or more adults, in the age range of 22 to 40 that need housing. We have this huge housing boom being created demand-wise because we have so many young adults. We had a huge baby boom, 20 to 40 years ago, and these people are forming households and they need a home to live in. A second factor really impacting everything is older people are staying in their homes much longer today. Back in 2010, the average age when someone sold their last home and, quote, moved in with family or assisted living was 75. It's now over 80 thanks to COVID. And what that means is there's fewer existing homes for these younger buyers to buy because the homeowners, the older people, are staying in their homes. That is one of the big things holding back our market. Another thing is just there isn't enough new homes for sale either. Every estimate has put the shortage of new homes for sale, the shortage of homes that have been built over the last 10 years, at somewhere between 4 to 6 million homes, meaning that builders have a huge deficit, that they're behind on building $4 to $6 million homes, and I honestly have no idea how they're ever going to catch up with that. So when you combine all those factors together, supply and demand tells me when you have soaring demand, shrinking supply, that tells me prices can only go up. And those are the two fundamentals that I follow. Everything else, take it for the grain of salt that it's maybe worth. So I prefer to follow supply and demand when looking at prices of homes. So if you have questions, disagreements, please text me. My number is 303-881-6374. I'd love to hear from you, and please share this video, with other people, whether it be your friends, your clients, your family members, and I would love to hear from them too.